Hello and welcome to Hardman Talks. I am here with Richard Jeans, our technology analyst here at Hardman Co. Richard has produced his latest sector report examining the outlook for the UK tech sector. Richard, thanks for joining us today. How are you? Are you well?
Very well. And yourself?
Yeah, all good. All good, thank you. All right, so could you talk us through the main findings in the report?
Yes, over the last year, UK tech stocks have had a challenging time, and this is in spite of a generally positive trading updates. And the sector has significantly underperformed the broader market. But interestingly, small cap software and services stocks are now hovering around their pandemic lows. At the same time, trading updates remain positive, balance sheets are generally strong, equity supply is shrinking, and valuations are modest. So the question is this an opportunity?
Yes, that is the question. So I guess over the past 12 months, UK tech stocks have diverged sharply from blue chips. Why do we think that is?
This is primarily because of the fears around AI-induced disruption. Investors have worried that generative AI could undermine business models, reduce pricing power, lower barriers to entry, and disrupt areas including classifieds, analytics, and enterprise software. So the selling is spread. It was originally, initially it was educational tech and digital advertising and translation software, and then it spread to classifieds like Rightmove and Auto Trader, then to analytics groups like the LSEG, Experian, Relics, Global Data, and most recently to enterprise software, with big company like Sage. But here's the disconnect. Trading news has been positive, and global IT spending is projected to grow at a healthy pace.
Okay, so please explain the sentiment indicator then.
Yes, in January, we analysed 104 trading updates and earning announcements from across UK tech-related stocks. We scored +1 for a beat, -1 for a miss. This is based on profit delivery, outlook statements, new contract wins, share price reaction. What did we find? Roughly half the announcements improved outlooks, are only around a quarter deteriorated. So this positive tone continued into February and March. So fundamentally, the news flow has been healthy. This is despite the macro uncertainty and geopolitics.
Okay, I'm just looking at your report, and you've got an M&A table, and it's highlighting there's a shrinking equity supply. So why is that? Could you explain that a bit more?
Yes, since COVID-19 pandemic began back in 2020, 44 billion of UK tech-related companies have been acquired. That's about 38 billion of that was software and services, and only about 10 billion new supply has come via IPOs in this space. So the total market cap of our remaining 51 services software is approximately the total remaining outstanding is probably about 38 billion in the software and services. In other words, the entire sector today is equivalent to about the size of what was acquired since 2020, and equity supply has shrunk dramatically. So the IPO market remains effectively closed, and historically shrinking supply combined with stable demand tends to support valuations.
All right, brilliant. Thank you, Richard. You've given us a great taster of what's in your report and what's going on in the sector. We'll have the other parts of this Hardman Talks interview coming up shortly, so please don't miss it. Thanks for listening. As always, if you're interested in further analysis, valuation tables, or company level breakdowns, please refer to the full report. We've got the link in the description below. Otherwise, see you back here on Hardman Talks next time. Thanks so much.